Hi all, welcome again to the Elliott Wave news series by Wave Strategy Advisors. This is Ashish Kyal here, joining from Wave Strategy Advisors. The current state of Indian market post our discussion in last week is that after the strong sell-off of nearly 250 points closed down, which was seen only in October 2008, Nifty managed to bounce back from the support of 8,050 55 levels. Now that level, as we mentioned even in the previous video update, was the crucial Bollinger Band support on daily chart, and we have seen that post the elections, each of the rally has been retraced by around 76.4%, and then there was a bounce back. Even this time, the rally was retraced nearly about 76.4%, and we can see a very strong bounce back on upside. So this is a fairly indication that this 76.4% level, along with Bollinger Bands, have been working very well in Indian markets as of now. And the bounce back which happened from 8,065 is again from the lower end of the Bollinger Band. So unless and until we see a close below the lower end of the Bollinger Band, somewhere around 8,060 or 50 levels, it is better to form the trading strategy, range bound trading strategy. So it means that if the price moves towards the resistance area, which is somewhere around 8,450, the upper end of the Bollinger Band, one should start looking out for shorting trade setups. If it moves towards 8,050, it will be crucial to observe whether price can manage to bounce back again from there or it breaks down below it. Our assumption is that since the same trend line and support have been tested time and again for the 6 consecutive times, and this time if it goes down towards 8,065, it will be the 7th time, there is a high likelihood that the support is going to be broken. However, first thing first, for now, the markets are moving in a range. It's better to form a range bound trading strategy. Few of the stocks have been falling very steeply. For example, Tata Steel and Hindalco in today's scenario, we can see a very sharp move down, and the prima facie reason for the same is the sharp sell-off we have seen in the commodity markets. Copper as of yesterday was somewhere around 365. It moved down by 20 rupees, had a gap down opening and closed somewhere, and is currently trading around 345 in MCX. That itself shows that there is a strong down move which has happened in copper, very essential industrial base metal. Very strong sell-off is seen not only in copper but lead and zinc as well. So it's a complete commodity crash that we are observing, and we have been reiterating this for more than a month now in our research reports, in our updates, video updates, that this can be the commodity crisis that people are ignoring, and everyone was focusing on inflation rather than focusing on slowdown in demand, slowdown in growth, and things like that. So the worst affected sectors again going to be oil and gas sector related, refining companies like Reliance Industries, Abana Offshore, shares of those oil and gas related sectors, along with metal sectors like Tata Steel, Hindalco, which have been worse affected because of the commodity crash. However, one has to keep an eye on the oversold readings. Currently, we see an oversold readings on the metal stocks. So there is a possibility we will see some kind of relief rally or bounce back from lower levels. So the strategy should be selling on rallies rather than selling at the lower levels. Also for Nifty, we have seen a retracement towards 76.4% now from the lows of 8,065 towards 8,365, I suppose 8,355, which is 76.4% retracement bounce back. So we have to see whether price can manage to break again now above 8,365, which is the intermediate high. If it does that, then the short-term positivity might continue. Or if it breaks below somewhere around 8,190, then we can have a short-term opportunity on the downside for around 8,060 target. For start of strong trending move, it is extremely important that price should break 8,050 on downside. From Elliott Wave structure perspective, there is a possibility that we are under the formation of a triangle pattern, since there have been sharp move on either side, but the crucial previous highs or lows are not taken out. It's a contracting environment, which is a precursor for a triangle pattern formation. And if that is happening, then you will have a very strong impulsive feeling of shorting exactly at the wrong time, which is near the support, and buying exactly at the wrong time at the resistance. So a triangle pattern is very challenging to trade. this sideways action can continue for a few more days or probably for a week or 2 weeks. And post that, we think that by Jan end or beginning of February, we can start seeing a very strong trending move across the globe and in Indian markets. And our expectation is on downside, which will continue for at least till towards April 2015. For now, avoid buying any stocks from the metal space. Avoid the commodity stocks. Avoid buying commodities as a whole. Avoid buying crude for now. It touched the $45 range, which is very crucial zone. The $40 to $50 is very crucial. Avoid buying it because the bounce back is only going to be correction short term. It might last for a few days or few weeks, but it is going to be very challenging trading that upside correction. The major trend for commodities is on downside. It's better to bet on downside on any of the relief rally that we see going ahead from here. You can also subscribe to our research reports, Financial Wave short-term update, which provides update on equities, commodity, forex, or you can subscribe to our monthly research report, which gives a medium to long-term forecast for Indian markets and where we are headed over short to medium term. We have arrived at a very crucial juncture, which was probably not seen over past 1 year. The PCR ratio has increased towards 1.30, which is probably, I do not remember seeing so many days prior to the expiry it has reached at those levels. So we are at a very crucial juncture. January is already known for month of forming top. So let's see how it goes from here. And I'll join you back again in next week. Meanwhile, if you have any queries or any doubts, please feel free to reach us or visit the website wavestrategy.com. And thank you for very much for your time. Goodbye from now, and see you soon again next week, same time. Thank you.